Let's talk about Amazon. They're kicking off Prime Day. It's two-day online shopping bonanza. Amazon is the king of online retailer. There are a few online retail ETFs that may be worth adding to your cart. Let's talk to a guy who's got some. Simeon Hyman of ProShares joining us now. I've known Simeon a long time, and it's amazing to me we give so much publicity to Amazon on a day like today. It's almost like, you know, it's free publicity for Amazon. But you have some interesting ETFs associated with retail. ONLN's been around for about a year now. Tell us what's in this here.
Yeah, so ONLN is our ProShares Online Retail Index, and it's exactly as it's described. It's online retailers. Scale matters, as you mentioned, so it's modified market cap weight. Amazon's 24%, Alibaba's 12%, and it really captures the market. If you look at what happened year to date, so a pretty good environment. Consumer discretionary sector is up 27%, but if you look at the S&P Retail Select Index, it's only up 6% because they're haves and have-nots. Yeah. The online retailers, ProShares Online Retail Index and OLNN is up 27. We also have a brick and mortar index to track the losers of the game, and they're down 3% this year.
And yet you don't have a problem with the fact that Amazon is 24% and Alibaba is another 12 or 13. You got two companies, look at these numbers here, well, 21 and 11, that are 35% of the index.
Because number one, it's winner take all in the online space. Scale is everything. Number two, it's a lot more diversified than just buying Amazon.
Because of the others that are involved.
Exactly.
So you've got Chewy in there, you've got a whole bunch of other ones.
Chewy just got added right after the IPO, so there are a lot of other names. But indeed, we do think it's important to focus on the big folks.
Yeah. Tom, where do you fit in on buying retail ETFs? I want to talk about his long-short retail ETFs that's out there, but it's been a rough ride for the retailers.
It's been a rough ride.
There's been one or two winners, and you just brought them up.
Yeah, you and I have talked about this before. When we were growing up, we used to go to the mall. We don't do that anymore. Every day we have boxes showing up at our house. Yeah. And if you want to get something, it's so time efficient. But the crazy thing that I don't believe is only 12% of retail buying in the U.S. is done online. We've got a huge amount of upside.
Right, and so I'm concerned that this is a backwards-looking idea, that because of the trend we all see with retail stores closing and with Amazon and other online retailers doing really well, there's an assumption that this trend is going to continue, translating into superior profits for the online retailers and subpar profits, even losses, for the brick and mortars. I'm not sure that's a winning argument over the next 3 to 5 years. So this is a bet. There's no question about it.
Well, let me show.
This is the kind of stock you should.
I want to get into this right now.
Years ago, not now.
You have a very interesting contra play here, CLIX, C-L-I-X, where you're essentially going long the online retailers and shorting the brick and mortar stores, 50%
That's exactly
short.
right. So I'm going to counter that a little bit, obviously, because we think Tom hit it right. It's 10% of sales are online in the U.S., about 12% globally. There is a long way to go and a lot of pain to be had on the brick and mortar side. We're really in the early innings. The e-commerce report that came out just a month ago showed the 10% U.S. online share. It also showed that online retail grew at 5 times the rate of brick and mortar. So even if we only get to 25 or 30% online retail as a share of overall, we're only 1/3 of the way there. And guess what? Amazon's only 1/3 of the size of Walmart. So from our perspective, it's in full swing, but really early innings.
But why aren't bricks, to Rick's point, why aren't bricks and mortars, some of them are clearly going to be winners, they're not going to necessarily go away. Is it that simple to say that Amazon's going to win virtually everything?
So there are 2 points. First of all, on the brick and mortar side, we equally weight the index, importantly, because a couple of them will win. So therefore, you equally weight, and Best Buy does well. So what? It's equally weighted in the short basket of the index. The other point is that even as the legacy players generate some online sales, Walmart is a great example. 37% growth in their online business in Q1. You know what happened to their overall earnings? -1%. The chief revenue officer for online just hit the road. They can't make money. It's better than going out of business, but it's much worse economics than they used to have. So from our perspective, still a long way to go.
Before I let you go, ProShares is sort of the leader in leverage and inverse ETFs. And I like to say that this is only a very tiny part of the overall market, maybe 2%, but it's a very big part of the controversies associated with leverage and ETFs. Some people are arguing that because of the nature of leverage and ETFs, leverage and inverse ETFs, particularly because of the reset every day, it's difficult for consumers to get their heads around this, and perhaps it should be included as a separate category, maybe something other besides ETFs. How do you feel about that, and how do you feel about explaining to the consumer what goes on in leverage?
Yeah, I don't have any views on the regulatory aspect, but from an educational aspect, we think it's critically important that people understand how they work. We have a ton of educational material on our website, and indeed the reset is important. You're absolutely right. The multiples on them reset every day. It's the only way it can work.
Yeah.
You can't wake up in the morning and go, oh, this is the minus 1.35 fund.
Yeah.
You have to know what it is.
Rick, you're the biggest registered investment advisor in the country. What do you tell your clients about leverage and inverse products?
They should be avoided because most ordinary investors aren't looking at a daily activity. You know, what happened today isn't relative to them. They're saving for college or retirement, which is decades away. So it's simply an inappropriate vehicle. And that's why I'm in the camp of saying it shouldn't be called an ETF. It should be called an ETL or an ETI, just to help distinguish it from other types of investments. Because although ProShares is doing a lot of good effort in education on your site, a lot of folks come upon these because they see them listed or referenced in consumer magazines or elsewhere on the internet or referenced in other conversation, and they lose the educational opportunity that would help them understand the nature of these investments. If you call them something different, it'll help convey the message, this is not your ordinary everyday ETF.
Maybe not an ETF, an ET, whatever, something else?
They're not for the average investor, but I gotta say, financial advisors continue to use them in a very responsible way. They've become very educated. And from a strategy standpoint, hedging standpoint, there's a ton more choice. Again, they're watching it every day. Yeah. You just can't buy it and forget about it.
I'm very split on this. I agree that there are niches for professional traders, but it is very confusing to explain to the average investor, and that's why I don't do them a lot on air. It's just difficult to explain the reset every day and the issues that are involved in that. So I'm sort of in the middle of all of that. Thanks very much, gentlemen. Really appreciate it. And that does it for this week's ETF Edge. I'm Bob Pisani. My thanks to Tom and to Rick and to Simeon for joining us today, and thank you for watching. You can find all of our latest videos right here on our website, etfedge.cnbc.com. We'll see you next Monday, same time, same place. Have a good week.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.